I no longer need a 620 credit score? In the last couple of weeks, there's been so much news lately in real estate, and it's almost like you can't really keep up with everything that's been going on. But we are, because that's my job. So already in one of my videos, like a couple of weeks ago, I talked about the 50-year mortgage plan that President Trump is proposing, which a lot of people are like, I don't know, that may not be a good idea, but we'll see and remain positive. But now in real estate news, if you haven't heard, they just eliminated the minimum credit score requirement of a 620 to qualify to buy a home. And they're also thinking of implementing portable mortgages here in the US. And the reason why they're trying to make all these changes is because people simply just can't afford to buy homes. And it's causing a lot of frustration. And there's just so many factors that is causing all of this. For instance, like first of all, there's very limited home inventory in many parts of the country because sellers are not moving from their homes with a 2, 3, or 4% interest rate, and sellers are not going to move at current high market rates. It's just not happening. It makes no sense for sellers to sell, so there's limited inventory out there for home buyers. And secondly, we have high inflation with very high home prices that have nearly doubled in the past few years, and the interest rates aren't budging at all in our favor thanks to this guy. And lastly, our job wages are not keeping up with inflation. So the government is trying to think of creative ways in giving buyers relief in the real estate market. So I want to unpack the demise of the 620 credit score requirement and also explain to you how portable mortgages would work if they came here to the US. And I gotta admit, I'm pretty excited for this one because I would be out of my current home in a heartbeat. Now, they already got rid of the 620 credit score requirement about a week ago on November 16th. So that's already in the works. So I'm going to discuss how these two things may be great for you if you've been desiring to be a homeowner, but it's been very difficult for you. And these two new proposals could be possibly major game changers in the real estate industry. And it could be very well benefit you and everyone that has been trying so hard to become a homeowner. So let's begin by talking about eliminating the minimum credit score of a 620, which has already gone into effect, which is exciting news. So get on the phone and get in touch with your lender today. No, I'm just kidding. Now, with the main two loan types that lenders use, there's the FHA and the conventional loans, which many of you probably know about. And the FHA loan is a government insured loan, so it's completely backed by the government. And because it's backed by the government, this loan allows borrowers who may not have a lot of money for a down payment and who also may not have the best credit to buy homes. So FHA loans are really great if you are a low to moderate income family, and especially if you are a first-time home buyer, because a lot of times first-time home buyers find it very hard to save up money for a down payment, and they may not have the highest of incomes. So FHA allows you to put down a minimum down payment of 3.5%, and you can have credit scores as low as a 580. Now, I gotta tell you that just because you have a low credit score and you meet that 580 requirement doesn't mean that you're definitely going to be approved for a loan, because it really will be up to that particular lender or bank that you choose to accept your 580 credit score, because not all banks will. Some lenders may accept that score, and some lenders may not feel comfortable at all with giving you a loan if your credit score is that low, because of course you are more of a risk to the lender. So keep that in mind. Now, if a lender rejects your approval, most times they're just going to tell you that you need to take some time and you need to work on building up your credit. And then they'll say, come back and talk to me in about a year or so, or once you've improved your credit, and we'll see what we can do for you. Also, keep in mind that the lower credit score that you have, the higher interest rate and the worse loan terms you will get. So even though you may get a yes from a lender with a credit score at a 580, just know that you still will get a higher interest rate and not the greatest of terms. So I know you want to know my opinion, and I'm going to honestly tell you that it's better for you to work on building up your credit so you can get better terms and a lower interest rate. I'm always going to tell you the truth, okay? To me, it's better to wait and put yourself in the best position to save yourself money. It just makes better sense. Now let's talk about the conventional loan. Now, this loan is not a government insured loan like FHA. It's just a regular housing loan that will be financed with your lender. And conventional loans have always been great for people who have a better credit score, like over a 620 620 and maybe have a little more money for a down payment than an FHA borrower. Now, it's not always necessary to have a large down payment for conventional. There's always been this myth that you must have at least 20% for a down payment to qualify for conventional, but that is totally false and not true. You can put down as little as 3% for a down payment if your credit and debt to income ratio looks good and you're a strong buyer. So now with the elimination of the 620 credit score for conventional loans, this could really open up opportunities for you home buyers. So it works like this. Whenever you put in a loan application to apply for a home loan, it's always gone through the lender's desktop underwriter system to evaluate your score and other parts of your profile, like your income, your debt to income ratio, the stability of your job, and what other assets you have. And if your score was below a 620, you would be automatically disqualified even if everything else in your profile checked out perfectly. Now, this desktop underwriter system never factored in anything like maybe you're just starting out with credit because you're a young adult that, just started your career after graduating college, or you just don't have a lot of credit history, but everything else checks out perfectly on your profile. It didn't matter because if your score didn't meet that specific number or higher, you were just out of luck to get approved. So now with the desktop underwriter system, you won't be completely eliminated from qualifying if other criteria in your profile is excellent and up to their standards. But just know that those other criteria must meet their requirements. They're not just going to say, oh, that's okay that your debt to income ratio is too high, or, oh, your income is too low. That's all right. We'll still qualify you. Nope, that's not going to happen. They're still going to evaluate those things too. So this is great news for you if you're a person that pays your bills on time and you're responsible with credit and paying your debts off. But you're just fairly new with credit, or you just have a very thin credit profile, because we know that one size does not fit all. And of course, there's people out there in the world that make great incomes and have loads of money, but they're still very irresponsible with their credit and paying their bills. So this will definitely open up more doors for you all that are responsible. So like I said, they already implemented this. So now's a good time for you to speak to a lender if you feel you have all of your things in order, but you may not have a lot of credit history. Okay, so the next thing we're going to talk about are portable mortgages. But first, I want to thank you for tuning in today. My name is Cherilyn Williams, your local Chicagoland realtor, helping you build your dreams through real estate. And if you are in the Chicagoland area, reach out to me and let's connect. And also don't forget to like, comment, share, and subscribe to my channel for weekly real estate content. Thank you so much. All right, so portable mortgages could be the relief we all have been waiting for. And they could totally change the real estate industry, I believe. With a portable mortgage, if you're a home seller, you could take your current low interest rate and your remaining balance and loan terms and transfer them to a new home that you want to buy. That sounds pretty amazing. And portable mortgages are already a thing in countries like the UK and Canada, because in those countries, they do a very short fixed rate mortgage term, like just for a few years, and then the home is paid off. But here in America, we do the long fixed rate mortgage of 30 years. So can you imagine being able to take your low interest rate of 3% that you have and transferring it into a nicer or bigger home if you're looking for more space and you're wanting to upgrade? With so many sellers not making moves because of the high interest rates that we have right now, I believe that so many sellers would have their homes on the market so quickly and as soon as portable mortgages became available. It would absolutely go crazy in the real estate market, and sellers would be listing their homes in droves, is what I think. And this would also increase housing inventory for home buyers. So all the pent-up demand that's been happening for many years would give so many home buyers relief, and buyers and sellers would be everywhere. It'd be just totally crazy and fun. But anyway, now the homeowners that would gain the most from this are the ones sitting on 2, 3, or 4% interest rates. The thing that's not great about this is if you are a renter or you're a first-time buyer, this would not benefit you because you're not already a homeowner to do this. So you would still be faced with the current interest rates and high home prices that we have. Now, with portable mortgages, there's a lot to think about because then refinancing would become less possible popular, and loan volume would definitely fall, which would greatly impact lenders because lenders make their money on creating new loans and when a homeowner refinances. It would also change how mortgage-backed securities are structured and priced, and that could possibly reduce investor demand. So this idea is still in the evaluation stage, so we'll see what happens. And word is this will definitely impact how to manage loan transfers between homes and how it can disrupt the broader market. But man, I'm hoping that they come up with a plan for this one. Anyway, thank you for tuning into my video, and I hope you have a great week, and I'll see you next Sunday. Thank you for watching.